Hey, Kevin Brierton here, your No Excuse Lender. I want to come to you today with the monthly update and report or mortgage report. I want to touch base with you on three main things today. So, one, as we're talking right now, the federal government's still shut down. So we're going to talk about kind of how that impacts some of the reporting. But number one, we're going to talk about the Fed and what's happening right now, forecasting what's ahead, and then kind of moving forward expectations for 2026. Now, the number of homes for sale continues to be higher than last year in most areas. This is actually a good sign for home prices. We need inventory to move property and allow buyers opportunities to buy different properties out there. So this has been a good sign for a healthy market overall. And more sellers are making price cuts. So if you look at across state lines in different states, Arizona specifically, we've had a lot of price cuts. This doesn't necessarily mean that they might have been overpriced, but it doesn't necessarily mean that they're dropping below too much of what the market should be, but they're dropping what they set the price at initially. So if you're selling, it's important to price it accordingly. Just because you price low, it doesn't mean you can't go up in price. So what we're seeing is some smart sellers are actually pricing at a price where that becomes competitive. And even this market right now, we're seeing home prices go up in a competitive situation if you price it correctly. So pricing correctly is really important because we are seeing these cuts in overall pricing in general. Home price growth is moderating. So we've seen the crazy days of the big increases in growth, but then just a couple years ago, we have seen this moderate a little bit where pricing year over year pricing growth has moderated. It's not negative, which is great in most markets, but it's moderating, which is probably a good sign overall. National averages continue to climb, but local markets, could have differences. So just every market's going to be slightly different based on where it's at. But overall, we have seen national prices continue to climb, which has been a good thing because we haven't seen a big correction or crash in the housing pricing. It will vary from market to market. Different markets across different areas will vary. So you definitely want to talk with an awesome realtor. We have a couple that we can connect you with as well in different states and different areas. And just know really big on knowledge. That's why we're recording these updates. Just know inflation remains elevated. So this is keeping the Fed funds rate higher. So the Federal Reserve target inflation rate is 2%. We're still sitting closer to 3% right now, which is not giving them a reason to drop interest rates significantly. We need to see this down a little bit. Otherwise, if we have runaway inflation, it causes a lot of other issues. Although we all want lower rates, we have to be mindful of the inflation that comes with lower rates. Unemployment is still holding steady. We really popped up during COVID. We had high unemployment and then came back down. Just have really in a good range for unemployment. This is something that they're watching closely as well to have a good economy and solid employment overall. So that has been a really good sign. Growth is stalling a little bit. We've had a little bit of a stall out of new jobs added, but we have lower unemployment. So the new jobs are not as important necessarily, especially if people are keeping their jobs, and we're not necessarily having to replace other jobs that people are losing. So something really good. And then the Fed's continually looking at different rate sets and when they're going to do it, but they're really looking at up-to-date information on hiring and unemployment. So as we're recording this right now, early October, government shut down. That'll delay some of the data around that. So it'll be interesting to see how that plays out. But people are still worried about a recession. Nearly 2 out of 3 Americans still think a recession is coming. 74% of Americans admit that world news or current conflicts affect their financial decisions. So this could be actually into your advantage if you're buying or you have clients that are looking to buy. People are a little scared of buying, and that's generally when it's actually a good time to buy. So use this information as power, because I think that because people are worried about things, that could be extremely good time to be looking for the right deals out there. Now, rate projections are difficult. We have had some projections of rates, kind of continuing to slide down. But the reality is if they go down, much more, we'll have a lot more buyers to the market. So if people are waiting to buy, then just for a lower rate, that may mean higher prices possibly. So don't just sit around and wait for a specific rate. Really looking for a specific house is important because you could refinance as rates dip. In September, October, we saw a rate dip. So we were able to do a strike rate opportunity with a lot of our clients and lock them in at a lower rate that we pre-set up for them. So that worked out really well. So I encourage you to set strike rate targets for yourself with your lenders or with us as a lender. We can adopt your mortgage and set strike rates as well. If you're a realtor watching this, we can do that for you too. Over the last 50 years, 30-year rates have moved in unison with the 10-year treasury. 10-year treasury doesn't directly show where interest rates are, but if you can see this indirectly, it has moved. The average spread between the two rates, the 10-year treasury and the 30-year fixed, have been around just under 2%. But if we look at this, the interesting fact here is we've had a large spread. So between the 10-year treasury and 30-year fixed, we've actually had a bigger spread than normal. When this spread widened, that's when we saw rates really take off up into the high sevens, almost low eights in some cases, and then dip back down. This spread is important because we're still above the national average on it. So keep that in mind. If we bring this down, then we can actually have a lower interest rates, even if the Fed doesn't lower rates and the 10-year treasury doesn't come down, then we can actually see a drop in rates, even if the rates technically don't drop if the spread goes down, because this is something that as rates start coming down and people believe they're going to come down, the spread should tighten up a little bit. What determines an interest rate? It's this 10-year treasury and the spread above it. So usually it's the 10-year treasury because that's kind of a guaranteed money they can get from the treasury, banks and lenders and secondary market. And then the spread on top of that is the difference between the rates. So that's kind of usually makes up the average interest rate is the 10-year treasury and the spread difference. So as that spread changes, then interest rates should get better. 10-year treasury is forecast to come down. This will be really something to be watching of. And it just has been stubbornly high based on inflation. So as the 10-year treasury comes down, then we should see a little bit lower rates as well. So what if the spread, is normal? Today, average interest rates are sitting somewhere, and every situation is different. So obviously you need to have your credit checked and review all that and review the situation. But average interest rates are sitting around low sixes right now. So with the spread was more normal, you'd see, almost a 3/8 drop in rate. Obviously the spread can widen too, so we keep that in mind, but this is something that we just need to watch and see if the spread gets tighter and rates could come down even with rates staying essentially the same. So if we have, with expectations growing for the rate cuts for Fed next meeting, this could be the beginning of a strong housing market in the fall. So if you're thinking of selling or buying, this is going to give you opportunities. So sometimes this could be really good because there'll be more houses on the market, a little bit lower rates. And it's going to be in this spot where you're going to want to catch it kind of at this perfect time. And it looks like it's coming up because if rates come down too much, then we're going to have a lot of buyers coming back to the market as well, which then increases competition, which increases pricing. So you kind of have to find that right balance. So be actively looking. If you're looking right now, be actively looking for that perfect house. And if you're looking to refinance, track these rates and set up the strike rate with your lender. Lower rates, stronger buyer demand. Just like I was talking about, if you have lower rates, we're going to have better demand for buyers. And really, it's around that 6% market rate. If we get below 6, we're going to have a pretty strong buyer market demand, and that'll really push up, the buyers in the market and the numbers of the people out there shopping. So this is definitely what we've seen personally as we've done business 20 years. Over the last couple of years, though, we've seen these higher rates and really slowing down it. But as it goes into the mid sixes, we see people jumping in and kind of getting ready to go. The home price expectations, we've seen, home prices continue to be pretty strong. There's different panels we look at and expectations for this, and this is the Fannie Mae expectation as well. And so, nobody's expecting rates to drop. Obviously, during 2008 recession, we had the dip, but that was really more about the number of people that were the households to buy a house, and we had oversupply of building during that time. So we had too many houses built during 2008 and not enough people to buy it. Very different now. Household growth has been remaining really strong, and we haven't been building enough houses. Home sales are expected to rise. We have had, the consensus is that home sales, as in general, will be rising. Home sales has been pretty depressed over the last couple of years for obviously a number of reasons: interest rates, high home prices, and so the last couple of years have been lower. But we see people are finally like, I got to move on with my life, and I got to sell, or I got to buy, or I got to do something. My kids are getting older; we have to get another bedroom. We got to downsize. We got to move states. We're seeing this, and that's why we're going to have a lot of pent up demand of people that actually need to do something, not just spectating, being an investor, speculating the increase of values, but actually needing to do something. So, big thing is conversations. If you're a realtor watching this, have conversations with your clients. And it's important to start that process of how do we help people get to where they want to go. And then if you're a client watching this, think we want to have conversations with your realtor partners and your financial advisors and your lenders. You want to start having conversations now to set up success in 2026. So if you're thinking about buying, or you want to entertain the idea of, what does this look like, and putting together a mortgage plan, it's important to get that set up and start the conversations now. Again, both if you're real estate and sales, start talking to your clients, and clients, I urge you, start talking to professionals. Don't be worried. And if a lender or realtor forces you to do something way, way quicker than you're comfortable with, that's a red flag. So what we start with is a pre-purchase consultation via Zoom, going through numbers and details. We'll even do that without pulling a hard credit check. So that's really important, just to plan it out. Even if people are a year out or they're trying to sell a house, we do what's called an equity transition plan if they're selling and buying. So if you want an equity transition plan or a mortgage strategy, or looking to get pre-qualified, go to mortgagestrategycall.com, and we can schedule a mortgage strategy call there, and we'd be honored to help. Or if it's easier, just call or text us at 480-553-8770, and we'd be honored to help you out. Thanks again for watching. If you found this valuable, please forward it and share it to friends, family, coworkers, anybody else that needs mortgage update or mortgage help or be interested in this. Again, Kevin Brierton, your no excuse lender with the Kevin Brierton team. Thanks again for watching, and have an awesome day. Take care. Bye.